So I see a lot of shareholders in the room. How many shareholders do we have here today? I thought so. Yeah, thanks for coming. Michael, you need to raise your hand. You're a shareholder. We've been building this portfolio, as Ron alluded to, through royalty generation. That's prospect generation business model focused on the royalty component for 20 years, augmenting that with royalty purchases and making some nice money in our strategic investment portfolio, netting $55 million USD over the course of the last 20 years, which we've reinvested right back into royalty generation and royalty purchase. And that puts us in a situation today where we're touching over 4 million acres of mineral rights worldwide. And I'll first point out that the vast majority of these over 200 mineral property assets that we have are early stage. And the great aspect of that is it represents an immense amount of discovery optionality, as those are being advanced by our counterparties to the tune of 100 kilometers of drilling a year at no expense to us. And we love that aspect, and we love being able to create through that generative model that long-term discovery optionality. But we've also purchased some key assets to help gain scale, and seen some of the assets that we've generated work their way up to the top of the pyramid. And today I'm going to focus mostly on the 6 producing royalties that really add up to our to a significant accretion of NAV over time. And so real quick, I'll just go through. We touch a lot of mining claims in Canada that are mostly early stage. Touch 12,000 mining claims in the western U.S. Very importantly, Leeville, operated by Nevada Gold Mines. And Gold Bar South is a paying royalty for us. It's a small one, $500,000 a year. And then we go to South America. Our most significant cash flowing royalty currently is Caserones. Last year paid right around $10 million USD. And some nice aspects of discovery optionality that I'll point out real quick. First of all, up in Arizona, Park Salyer has been a nice discovery that we have a piece of. It speaks volumes to the model, as that was a generated asset. In addition to the Peak discovery, which I'm going to show you a slide on here in a minute, and that's a really nice one. That's the copper, zinc, silver portion of the lead, zinc, silver discovery at Taylor, at zones laterally into a copper system. South 32 is pretty excited about that. We're delighted to have that one. I'm going to speak to a little more detail about that in a minute. Up in Fennoscandia, we're now the second largest mineral rights holder of any company in all of Fennoscandia, with a plethora of projects in different geological terrains that are being advanced by our counterparties, and some nice drill holes coming and emanating from those assets. Probably most importantly, our next producing royalty would be the Viscaria project, which is a copper, iron, gold system. It's the copper portion of the iron oxide copper gold system that exists in the Kiruna district of northern Sweden, the largest underground iron mining district in the world. And that will come online, according to Copperstone, the operator, in 2026. Then moving further south to the Tethyan Metallogenic Belt, arguably our most valuable royalty in the entire portfolio, which I'm going to go into some detail today about, would be Timok, and the Timok Magmatic Complex, which is Europe's largest historic copper and gold producing region, and we have a long history there. It was one of the first business units within the company. It speaks volumes to how we both buy and generate royalties, as we have royalties in that district that we have generated and purchased, and it speaks to the synergies of those two models. Balya, lead, zinc, silver, and Turkey. And first of all, before I move on, Timok last quarter, and every quarter has been a record. Last quarter paid $1.58 million from the upper high-grade zone. They haven't even gotten to the lower huge porphyry zone yet. And we'll look at some slides discussing that. Balya is paying over $1 million a year, lead, zinc, silver. Gediktepe is a great royalty right now, but the oxide zone is about mined out. And we'll talk about how there'll be a hiatus of cash flow there as they get into the sulfide zone. So let's move in. If you've heard me talk before, I've said this is going to be a cash cow. Well, I'm happy to stand here today and say it's not someday, it happened. And we have 5 consecutive quarters now of strong cash flow, and we're not looking back. I'll point out that 23 is a little bit exaggerated in that there were catch-up payments that came from Timok. So that bar, on a recurring basis would be a little lower than that. So keep that in mind when you look at our results that come in this year. But still, very nice increase in cash flows that are coming from our key production royalties, in addition to the component of property agreement payments that we've always been good about building into our deals when we sell projects off, have pre-production payments. Great ways for us to collect nickels and dimes on our way to getting dollars. Yeah, and not by any design of ours. We're simply interested in being exposed to prospective mineral rights. And consequently, that's resulted us in having a nice blend between copper, gold, and other metals as revenue sources. This last year, as I said, 42% gold, 38% copper, the rest and balance of interest, income, property agreement payments, et cetera. And nice to have that diversity coming from a couple of key assets. And speaking of key assets, these are the two. You don't need to go any farther than these two to understand that the stock is substantially undervalued. Caserones, where we have an effective 0.8306% royalty, is a multi-decade mine life asset operated by Lundin Mining Corporation in northern Chile, and last year paid right about $10 million to us. Lundin's being quite aggressive on the exploration on this property, and I'm going to show you a slide that illustrates some of that here in a moment. This represents a very long-lived, significant copper moly asset for us to be able to build this company around. And then the second one that might be even of greater value is Timok, where we have a 0.3625% royalty over the portion that's currently producing and additional royalties within the district. And that is a flat-out company maker. That's copper gold in Serbia. To back that up, Gediktepe, as I said, the oxide zone there only has about a year and a half left where we have a 10% royalty. It sure has been nice to get $1 million a month for a while. But that one will tail off. There'll be a hiatus till the sulfide zone gets going where we have a 2% royalty on that, and the sulfide zone is polymetallic. At Leeville, that royalty has ebbed and flowed over the years. We're happy to see it on an uptick over the course of the last couple of years. We're on track to pay over $4 million this year. Obviously, that's gold on the Carlin Trend operated by Nevada Gold Mines, and Balya, the lead zinc silver mine in Turkey. But let's go in and talk about this one, which is probably, I get asked often, where's the hidden value in EMX? And this is one of the areas where there's key hidden value right here. And I'll point out that we have royalties on 3 licenses within the Timok magmatic complex at this time. We're very fortunate that we recently have acquired some additional licenses that we haven't yet put on the map, but they will be shortly. And the big discovery at Timok is on the 0.3625 ground, and the lower zone is highlighted in goldenrod, and you can see that. And I'll point out that it's plunging at 65 degrees to the west. And it's plunging from the ground where we have the 0.36 royalty to the ground where we have a royalty that we generated from having been in Serbia in the early days. That's 2% on gold and silver and 1% on base metals. And that is potentially very significant. And let's look at that in cross-sectional view. First of all, I'd like to point out that Zijin's already into this district at over $1 billion of capex, and they've announced an additional 3.8. So they're putting $5 billion into this. And talk about other people's metal or other people's money, Rick. That's a great example right there. Let's look at that in cross-sectional view. So you can see that lower zone at its thickest and highest grade portion is utterly and completely open-ended, right towards the 2%, 1% boundary. So at the copper and gold ratio that we have here, that's a rough tripling of the royalty rate. But even excluding any potential on that license to the left or to the west, just from what is known now and published on the Zijin website, this is a company-making asset, and we're just delighted to have exposure to this. It speaks volumes to how we built this portfolio over the years. And I can't help myself, but I'll remind everybody that I bought that royalty for 200,000 Canadian dollars. It's already paid 11.5 million, and there's $500 million more to come without any further discovery. That's a company maker. This is on the Zijin website. You can see this GIF, and you can see the drill holes that penetrate through the 2 upper zones. One of those is now in production. Right now, according to Zijin, there's 9.5 years remaining of production at roughly constant levels from the 2 upper zones alone. And as you can see, there are absolutely no drill holes that delineate the base of this system where it's at its thickest and highest grade portion. They've announced to the world that they will drill this to 3 kilometers of depth, and it will be mined by block cave technology, so they'll be able to start off in the highest grade zones first. We're very excited about this, and I believe one of the hidden assets within EMX's portfolio that's not represented in our share price is the potential for this lower zone right here. But you own royalties for discovery optionality, And we're really delighted to see what Lundin is doing recently, having purchased 70% of Caserones from JX Nippon. Including inferred resources, it's over 1 billion tons already, but they're being aggressive at further exploration. And our royalty footprint isn't around just Caserones. It's a huge footprint covering a major portion of this belt. And Lundin has said that they're putting $15 million into exploration this year. They say the 2 highest priority targets that they are testing are the deep sulfide zones that are in pit at depth at Caserones itself. They're doing in-pit drilling there. That's a great place to find more ore from my perspective. And then right next door at the Angelica discovery, which is a previously known oxide copper system, they're now into the primary protors, the sulfides, at depth, and have announced to their shareholders that they're excited about what they're seeing there, in addition to testing another half dozen or more prospects within that footprint. So I could go on and on about discovery optionality in the portfolio and various things that are going on. I'd like to point out a couple of fun ones. This is a package of claims that we staked. It was open ground, sold it to Arizona Mining, who then sold it to South 32. South 32 is delineated and continued to expand the huge discovery at the Taylor deposit, high-grade lead, zinc, silver, and that system has zoned laterally into a higher geological temperature formation and has become a copper system. There are drill holes in here that exceed 300% copper. There's truly phenomenal intercepts here. We don't know when this is going to come out of the ground, but they are advancing this. It has been designated a strategic asset by the U.S. government, and we're just delighted to see that discovery being made. 2% royalty, uncapped, unbuyable. Sitting here today with 113 million shares issued and outstanding, $20 million in the bank. As of the end of last quarter, we had a short-term loan of $34 million, but that has been refinanced with Franco-Nevada. Franco-Nevada holds our long-term debt now. It's a 5-year note. The current interest rate on that note is 8.36%. And I'll point out that we're just delighted to continue to advance our relationship with Franco-Nevada. They own approximately 6% of us on a fully diluted basis. They hold our debt now under quite amicable terms. We're very pleased that they continue to be a capital partner for us, and we continue to look for ways to build on that relationship. And one of those ways is that we've formed a joint venture with Franco to look for early-stage royalty financings. And one of the reasons why Franco is interested in EMX is that we can provide them with a type of deal flow that they're not seeing elsewhere in the industry. And they have a great appreciation specifically for our royalty generation business, which obviously does not compete with their royalty purchasing and royalty financing activities. Happy to answer questions. I see Rick smiling. He probably has one saved for me.
David, that was a terrific presentation. Does anybody have any questions? If not, I just wanted to say, I've been doing this business for a number of years, and it's really rare and humbling to come across somebody with the business and technical chops that can put together a portfolio of world-class assets like that and generate these ideas. This is a real talent. Congratulations on what you've been doing. It looks really interesting.
Thank you kindly, Ron.
Yeah.